Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out what all this corporate jargon actually means, and if the companies are hiding something today. We're diving into AXT Incorporated's latest filing, a Form S-3 registration statement for securities they might offer. This is basically a company telling the folks at the Securities and Exchange Commission, or SEC, that they plan to sell some of their stocks or bonds in the future, and this document lays out the game plan. It's a bit like a pre-sale announcement for investors. So, what kind of future sales are we talking about? AXT's looking to raise potentially up to $100 million. That is a pretty significant chunk of change. They're not just offering one type of security either. They're looking at a whole menu: common stock, preferred stock, debt securities, warrants, subscription rights, purchase contracts, and units. It's like they're setting up a buffet of investment options for us, or rather, for the market. This entire document is a sign of a company that wants to be flexible in how it raises money. They're using what is called a shelf registration. Think of it like a pre-approved shopping list. They've gotten permission from the SEC to sell these different types of securities over time without having to file a whole new massive document for each individual sale. This can make them quicker to react to market opportunities, or to raise funds when they need them for things like general corporate purposes, or working capital. Now, who is AXT Incorporated? They're a materials science company. They develop and produce specialized semiconductor wafers. These aren't your everyday silicon wafers, but rather high-performance compound and single-element semiconductor substrates. These are used in advanced applications where normal silicon just won't cut it, like in high-speed data centers, 5G communications, lasers, and even for things like LiDAR in autonomous vehicles. Basically, they're making the building blocks for some pretty cutting-edge technology. For those who want to keep an eye on AXT's public performance, keep an ear out for AXT on the Nasdaq exchange. This offering won't change that listing status, but it does mean they're a publicly traded company that has to follow all the CC rules. One of the interesting things about AXT is their operational setup. All of their products are actually made in China by their subsidiaries and joint ventures there. They're a Delaware incorporated company, but their manufacturing heart beats in the People's Republic of China, or PRC. They're quick to point out that they are not a PRC operating company, and they do not use what are called variable interest entities, or VIEs, in China. This is a crucial distinction, especially with the increased scrutiny on Chinese companies and their corporate structures. They believe this setup means they don't need special permissions from Chinese regulators for this offering, which can be a big hurdle for China-based firms. AXT emphasizes its vertically integrated supply chain. This means they control more stages of the production process, from raw materials to the final wafer. They explain how they move money within this structure primarily through capitalizing their Chinese subsidiaries, licensing intellectual property, and transfer pricing. They also mention that their various Chinese subsidiaries and joint ventures pay dividends back to the parent company. For recent years, these dividends have been in the millions, which is good to see, though they also state they have no current plans to distribute earnings to their investors under their corporate structure. Now, every financial filing, especially one detailing a fundraising effort, comes with a hefty dose of risk. AXT is no exception. They warn investors that investing in their securities carries a high degree of risk, and they specifically highlight the unique legal and operational risks tied to their corporate structure. This is where things get really important for anyone considering putting their money into AXT. The risk factors section is where companies lay bare all the things that could go wrong, and for AXT, the biggest concerns seem to revolve around their operations in China. They mention that the Chinese government has virtually unlimited authority and can intervene or influence commercial operations with little notice. They've experienced this before, like being instructed to move a manufacturing facility. They also bring up the evolving landscape of PRC laws and regulations, as well as ongoing government actions related to data security and anti-monopoly concerns. While they say these haven't impacted their business yet, they are definite risks that could do so in the future. Another point of concern is PRC cybersecurity regulations. Even though AXT states they don't believe they are directly subject to oversight by China's Cyberspace Administration, or CAC, because they don't have direct operations in China, and their subsidiaries and joint ventures don't collect extensive personal data. This is still a significant area of risk. Regulatory environments in China can change rapidly, and even indirect implications can be substantial. When it comes to dividends, AXT is pretty clear. They do not anticipate declaring or paying any cash dividends in the foreseeable future. Their plan is to reinvest all available funds back into the business to support growth and expansion. So if you are an investor looking for regular income from dividends, AXT is not going to be your go. toe stock for that right now. As for what they'll do with the money they raise, unless specified otherwise in future documents, AXT tends to use the net proceeds for working capital and general corporate purposes. This is pretty standard language. It means they'll have broad discretion in how they deploy the funds, which can be good for flexibility, but also means investors won't have a precisely defined use for every dollar raised. They also detail the various types of securities they might offer. For debt securities, they might issue senior or subordinated debt under an indenture with a trustee. The terms will be laid out in prospectus supplements, but they cover things like interest rates, payment dates, redemption provisions, and events of default. It's a pretty standard framework for corporate debt. They also have provisions around consolidation, merger, and sale of assets. This is important for understanding how the company may be restructured or acquired in the future. They can't just merge with another company unless the surviving entity assumes their debt obligations and no default is happening. This is a protective measure for debt holders. The events of default section is critical. It outlines what constitutes a default on their debt, such as failing to pay interest or principal, or certain bankruptcy events. If an event of default occurs, the trustee, or a significant portion of debt holders, typically 25%, can declare the principal and interest immediately due and payable. This is a key protection for lenders. The sheer volume of text dedicated to describing debt securities, their terms, modifications, waivers, and defeasance mechanisms highlights the complexity and importance of these financial instruments. It shows they are prepared to go to great lengths to secure debt financing, but also to protect themselves and their bondholders under various scenarios. Defeasance, for instance, is a way for the company to be legally freed from its debt obligations by setting aside funds to cover the debt. For warrants, AXT is outlining they might be issued to purchase common stock, potentially with other securities. The details here, like exercise price, expiration dates, and how they might be traded, will all be specified in those future prospectus supplements. Purchase contracts are another avenue. These are agreements where holders and AXT are obligated to buy or sell securities at a future date. The terms can be quite varied, involving specific or variable amounts and prices indexed to market conditions. And then there are units, which are combinations of these different securities. This allows AXT to create more complex investment packages. For instance, a unit might include a bond and a warrant, offering investors a blend of income and potential equity upside. The plan of distribution section explains how they intend to sell these securities. They can use underwriters, dealers, or agents, or even sell directly to purchasers. They can also engage in that at-the-market offering, which is a common way for companies to sell shares over time on exchanges and block trades. This section essentially covers all the bases for how they'll get these securities into investors' hands. It also touches on stabilization activities, which underwriters might use to keep the price of securities steady during an offering. On the legal front, Lewis Brisbois Bisgard and Smith LLP is handling the validity of the securities being offered. This is standard practice, ensuring everything is legally sound before any sales can happen. And as for their auditors, BPM LLP is listed as their independent registered public accounting firm. They've signed off on AXT's financial statements, giving investors a level of assurance about the accuracy of the numbers. A really important part of these filings is the incorporation of information by reference. This means AXT is telling you to also look at their previous filings, like their annual reports on Form 10K and quarterly reports on Form 10Q, to get the full picture. They've incorporated their 2024 Form 10K, which included financial statements, and their quarterly reports for 2025. This is a common practice that saves space and time by referring you to officially filed documents already available to the public. Let's dive into those incorporated financials. Their 2024 annual report on Form 10K, filed in March 2024, is key here. While this S-3 is filed in November 2025, referencing the 2024 calendar year numbers gives us the most recent full year financial performance. They also incorporated their Q1 2025 filing by reference as well. From those documents, we can see their revenue for 2024 was approximately $265.5 million. Then looking at the first quarter of 2025, their revenue stood at about $66.8 million. This shows a slight dip from the prior year's first quarter, which was around $73.6 million. It is important to remember that this is a segment of their overall revenue picture. Now, looking at the bigger picture of AXT, they're in a specialized high-growth area of materials science. Their strong position in the market for semiconductor wafers, especially for high-end applications, is a significant strength. Their vertically integrated supply chain in China, while carrying its own risks, offers potential cost advantages and supply chain control. However, their reliance on Chinese manufacturing and the potential for regulatory shifts there remain a notable risk. The fact they are using this S-3 filing indicates they need access to capital, and the $100 million target suggests they have growth plans that will require funding. The risks associated with their corporate structure, particularly concerning PRC regulations, are paramount for investors to understand. It is also a point from the filing that they do not pay dividends, which is a trade-off between growth and immediate investor returns. Alright, that is our deep dive into AXT Incorporated's S-3 filing. What do you think about their strategy and the risks involved? Let us know in the comments below if you found this breakdown helpful. Please hit that like button and subscribe so you don't miss out on future corporate investigations. And don't forget to join our Discord community, linked in the description, to continue the conversation. Thanks for watching Corporate Decoder, and we'll see you in the next video.